Good day. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Thursday, and we are now on May 14th, 2020. Futures market already open. Obviously, this won't open again until 8:30 in the morning. And by the way, they are going to reopen the New York Stock Exchange trading floor on May 26th. I don't know how they're going to do it. They said a subset of people. I know that one of the things they said is no public transportation there. When you arrive, you've got to be tested for temperature. You got to wear a mask. There'll be other protocols that they do, social distancing. I spent years going back and forth. I used to own a Wall Street firm. I don't know if any of you knew that. So I had we traded through a couple of different ones there that it was interesting as can be. I was a discounter in the stock business for a while there. Fascinating business and loved the trading floors. I grew up on the Chicago trading floors. New York was not as action-full, in my opinion, as what Chicago's been all about. It was just crazy in the heyday. But looking at these markets, you can see green behind me, so the markets did better today. We're seeing that even the gold was up with these markets. Currency markets were down as a group. Oil was mixed on the day. So let's get to the different sectors and see what happened. Overall, when we look at the tech sector, and we know this has been the strongest sector of the marketplace, it still is. What the market did is it fell back today, and if we take a look, and this is what I want you to pay attention to, there's a gap in this chart. So you have a market with 90.17 is the high of that day. We then leave that gap in place, and today we get down to 90.19. Now, I cannot tell you if the gap's going to be filled or not, but it was certainly an attempt to do it, and I was looking at it. Always pay attention to gaps. Markets like to fill them, and then once they're filled, there's like a sigh of relief. You just missed it by 2 cents. It was a pretty good attempt. When I look at this chart and add the swing line study to it, and by the way, this is a study I wrote. And on this, I did it when my son was in his teens. He's now in his 30s. And to make a long story short, I wanted to prove that I could teach anybody how to chart and how to recognize a trend. And the concept here on a swing line is that the line here is going to draw in one of 5 rules. You don't get to choose the rule. The rules are set in on the formula. And what you're looking for is, do you have a pattern of higher lows and higher highs for an uptrend? And do you have a pattern of lower highs and lower lows for a downtrend? No trend has a pattern of a lower low and a higher high, and you're waiting for it to reset. It's really pretty simple. And I did it so school kids can learn this. And then what's the risk? Well, if you're buying, you don't want 88.08 to be taken out. So gives you an idea of the element of risk. Obviously, I carried it a lot further. I then went into where could support be in the market. I've learned in my charting, and it's 51 years of charting now. By the way, it's 51 years since I was at and became a broker. When I was in high school, I was on a stock trading club. And this goes way back when, so it's a long time ago. And I always loved charting. And I learned way back that there's a neutral point on a chart. And the neutral point, you find the moving average that you believe the market likes to work from. I believe it's the 18-day moving average. You might believe it's the 20, the 21. I used to buy services that would optimize it market by market. I found I was throwing my money away. Some people live by it, and I can't argue. Whatever works for you works. But all you did is fall back into the combination of support today of the 100-day average of closes in green and the 18. You kept the trend alive. The bull trend is very much still here. When we take a look at where the market's resistance was, it was climbing this wall on the upper Bollinger Band, and everything was fine until you lost the embedded reading. And that happens when The red gets under 80. As soon as that happens, you're looking for a retracement, and ideally, it'll go back to the 18-day average or the closest main moving average. And it most certainly did that today. So yay, one for Ira. Okay, trend is still up, and that's where I think the pros were buying, and I think they were buying there with stops under 88.08. But were they buying? I don't know. Do you want to buy an overbought condition? I don't. So the way I filter out trades is if a market's overbought, not embedded, I'm not interested. So everything else on the chart works, but it's overbought. When I come to SMH, the pattern here is different. I can be making weird arguments here. In fact, I think I have this wrong. I think I did it wrong yesterday. This high is 139.36. This high, let me just show you. Certainly 137.70, 137.91, then the market starts down. We already had a lower low. So on this particular chart, I'm wrong on this. I should be having this arrow pointing down from here. We have lower highs, lower lows. It's neutral because you're over the 18-day average. Momentum is flat as well, not going anywhere. Thought I had corrected that. In XLI, the first challenge of a Bollinger Band is where I think the trade comes out, be it on the downside or the upside, especially when you're in a narrow set of bands. You need to see, is the market going to break out of them? It did not so far. So you're oversold, hit the lower band, not a trend. Don't be surprised if it tries to get back to the 18-day average. But again, it's not trending. It's stuck in this sideways pipe, if you will. XLE, to a degree, it's stuck in this pipe. But it does have a downtrend. Lower high, lower low. You're still under the 18-day average, or are you? 36.13 is under 36.27. Momentum down. If anything, the pros are probably nibbling on the short side here at 36.27, which stops over the 38.80 level at 38.81, looking for 32.82. This isn't as tight as some of the pipes that we're seeing formed by the closeness of the Bollinger Band. QQQ. All it did is fall back for good measure to prove me right. Yay, yay, yay. You lost the embedded reading yesterday. It's when the red line closes underneath the 80 level after the market's been having both numbers over 80 for at least 3 days, which it was. You had an outside day down, a key reversal. What's the difference between an outside day down and a key reversal? Do you know? If you make the highest high of a leg in a market, and then you get where it takes out the previous day's high and low, it's called both. Properly, it's a key reversal right there. And what the market did is it made a run yesterday for the 18-day average. It missed it by 18 cents. So today it hit it for good measure, and that's all that it is owed. So the trend is still up. You're in overbought territory. When you lose an embedded reading, it is not uncommon then to revert back to being overbought. Overbought means one of the numbers at least is over 70. You want that to work off before you're comfortable trading again. At least that's my theory. Doesn't mean I'm right. This is a much narrower pipe. See what's happening here? I'm looking for this market. It didn't quite get to the lower band. It missed it by about 13, 14 cents. It's fighting at this 18-day average. This is the frustrating type of trade. You get this often when these bands get this narrow. I learned years ago to run away from that type of trade. In GLD, higher lows, higher high. The market's high today was 163.34. The upper Bollinger Band is 163.60. You are in overbought territory. If you should hit that number, I would expect to see the pros take money off the table in this market. In the gold miners, The pattern is one of a lower low, now a higher high, not much going there, overbought. I see a mess of a chart, nothing going on in that one. TLT, you have a lower low, a higher high, so you've run back into the center of the chart saying, okay, we don't know which way to go, and that's pretty much what I'm seeing. Momentum's pointing up. If you look at the bias, it's actually down. You finished 167.14. The 18-day average is 167.18, and when you're under it, we call the bias down. Be over it, the bias would be up. Next, I look at FXE, and we've got a pattern of really, we've had lower highs and a lower low, and we're under this market right now. Oversold, maybe it can reach for 101.52, but I'm not exactly sure on that. So you put it all together, you're trying to come up with where the numbers are. As I said, I have done a special gold report, and I'm going to be doing more reports, regular reports. This one's on the futures because we know the GLD, it's based on the futures. And in looking at it, I take you to a monthly chart, then to the weeklies. I'm going to take you to seasonals. So I'm going to look at a 5-year, a 15, and a 30-year seasonal. I'm going to show you bull and bear years. This is a bull year, what the typical pattern is in a bull year. Then I'm going to take you to the daily chart for the August gold, because we're already ending where you don't want to be into the June gold after next week. How do you get it? Just go to our website at www.iraepstein.com. Under the word research, you'll see special report on metals. You can click up here. It'll take you there as well. I'm Ira. You have a great day, and I'll see you all tomorrow.